Recording in progress.
So yeah, very good morning, everyone. So this is Pasi from SLKFC channel. So this is the short video for outlooks of this week. So let's get into the video. So before getting into the video, we have shared, the JP225 to taking a long trade. So unfortunately, it hit our stop losses. So let's break down the idea for taking the trade. So you will understand the reason behind for taking the trades and what is the reason for SL. So this is the JP225 on the monthly time frame, right? So we all know that the structure was a bullish. So the thing I have explained you on the last YouTube video, the mainly you need to concentrate on the structure first. Understand the structure is the king, you need to understand the structure first before taking any of the entries. And you know that the liquidity is important for taking your entries, validate your entries. So the structure is for the direction and the liquidity is for your entry, right? So on the monthly time frame, you all know that that would be the bullish trend. You all know that the direction, the higher time frame candles are making a new higher highs to the upside, right? There is no intent for breaking a structure to the downside for changing the direction. Am I right? So what you all need to do, you need to know the phases of, we have two types of phases in the market structure. We have the expansion phase and the retracement phase, right? So you can see the candle which makes that high, the beautiful candle that makes a new high of that level. So that would be the expansion candle, right? That would be the expansion candle. So after that, you can see the bearish engulfing candle making the retracement. So that would be the retracement. I told you there would be only two types of phase, the expansion phase and the retracement phase. So if the retracement was completed, then the expansion will be start. If the expansion was completed, then the retracement will be start, right? So the retracement would be always the pullback. The expansion will be always making a new highs. So here, how you need to confirm the retracement has been completed. So what I told you, in a bullish market structure, all the, all the higher highs of the expansion or the all the higher highs or the expansion. Did you know that this move is the expansion, right? This is the expansion. Okay. Now these low, not lower lows, the higher lows or the retracement. These lows or the retracement. Understand? After the retracement completed, it make a new higher high. That would be the expansion. You understand here? Same like that. You need to know the sell candle. You need to watch the sell candle. You need to know the retracement is completed or not. How you check that the retracement is completed? The retracement need to take a liquidity. Understand? And if it is sponsored by any of the candle on the daily time frame, that would be reason for another expansion, right? So here you check the monthly candle closed by taking a previous monthly low as liquidity. Okay, so that makes a sense. The retracement has been completed. I can look for another expansion, right? So here now let me go for the weekly time frame. What I have seen here on the weekly time frame, here check, you know, a weekly time frame came to take a liquidities. These are the liquidities, it takes some of liquidity and it is sponsored by some key level. So inside that key level, when a candle triggered by the weekly open close key level, inside the key level, you have a sweep of that level. If you understand, we have a sweep of that level inside the key level. And you need to check that sweep, that sweep, it is sponsored by any high time frame candle or not. Understand? If it is sponsored by any high time frame candle, that would be reason for another expansion, right? So what you need to check, if it is sponsored by any fresh key level or not. So in the weekly time frame, we don't have any key level. Let me go for the daily time frame and check what happened on the daily. And it can go for the daily time frame, that is sponsored by a daily key level. Did you understand? So the monthly retracement has been completed because the monthly candle closed as previous monthly low has been taken. So the monthly has shown that the retracement has been completed. The weekly time frame has been shown as inside the key level we have a sweep. That is the reason for the weekly retracement has been completed. And if you go for the daily time frame, it is taken the liquidity and it is sponsored by a key level. So that make a sense. The retracement has been completed and the daily expansion has been started here. Do you understand? So that is the reason for the daily expansion. Why? The liquidity has been taken and it is sponsored by a key level, and the weekly and the monthly has been supported to a daily bullish environment, right? Now what we need to look for here, a daily reject daily has been done. So let me mark this as a daily reject daily. So that key level, which is your daily reject daily. Okay. Okay, that would be the daily reject daily. Now, after the daily reject daily, what is our next step? We will wait for the H4 breakup structure. Did you understand? For confirming the direction, we will wait for a daily liquidity to be taken and daily key level to sponsor the move. Okay, so here the daily key level to sponsor the move. Once the move was done, you need to wait for H4 breakup structure, right? If here the H4 breakup structure happened, then we can confirm that the bias has been completed, right? Daily reject daily, you need to wait for the H4 breakup structure, right? So let me go for the H4 time frame and look for what happened here. So before go to H4 time frame, I have told you that if the H4 breakup structure is so far level, what you need to do, there would be two possibilities. You can enter as a direct entry in the apex key level, or you need to wait for any internal structure to be broken and wait for any internal liquidity and take the key level nearby that liquidity, right? So here daily reject daily was done. Now let me go for the H4 time frame. So let me mark this is our daily reject daily. Sorry. This is our daily reject daily, a candle which is triggered on the key level, right? So let me mark this candle. Okay. This is the daily reject daily. Now wait for the H4 breakout structure. And you can see here the H4 breakout structure is in that level. Understand? That is so far level. In the situation, what we need to do, we need to do, like we don't go for the we can't wait for the H4 breakup structure to be taken before taking this, because that is so far level. And if you wait for it, we will need to miss the big move here, right? So what we can do, we can enter a direct entry, or we can wait for any internal breakup structure. So if you are entering a direct entry, you can see this is the H4 key level. This is the H4 key level. So this is the extreme key level. You can enter here and you can place your stop loss limit and you can target for this internal breakup structure, right? So this is the one reason you can enter directly here. Or if you don't want to enter directly, what you can do, you can wait for any internal breakup structure. So what is the reason for any internal breakup structure? So here you can see the structure has been broken here. Let me go for the line chart and I can show you here. You can see the internal breakout structure has been broken here. So once the internal breakout structure done, you can see a single candle liquidity here, and we have the engulfing entry opportunity. You can see this is the engulfing entry opportunity. So here we can take a trade on like this. So in that key level, and you can place your stop loss here and you can target for that level. Understand? So this is the reason for another trade. So if you miss this both one, or you are waiting for the external breakout to be happen, then here you can see the external breakout was happened here. This is the external breakout structure. Why this is the external breakout structure? Why we are marking that level? Because that is the reason for, that candle is the reason for, making a candle to trigger on the higher time frame key level. Understand? So that is the swing high for making this structure, right? So that structure need to be broken out. That's why we are calling that external breakout. Understand? So here the external breakout was done here, right? The external breakout was done here. After the external breakup structure, what we need to do, we need to wait for a liquidity to be taken, and we can take any key level nearby. So here you can see we have make this low was made by here, and you can see the liquidity was taken by a sweep here. The liquidity was taken by a sweep. and you can see that it is sponsored by a key level on the H3 time frame here. Okay, the liquidity has been taken here and it is sponsored by the H3 key level. So what the trade we have taken here is, we will wait for the liquidity to be taken. And we can know that is sponsored by H3 key level. And I can see this sweep, this sweep, and I will see that the structure has been broken. The internal structure has been broke out that level. Okay. So the reason we have taken a trade here is, we have seen this breakout structure, this breakout, this breakout, and I have seen this engulfing entry opportunity, and I have placed our order on that level, this entry level, and we have placed our stop loss limit on here, and we have targeted for the daily time frame highs, which is, at least to be that level, because it is started from a weekly time frame, right? We can see the weekly low was here, the weekly high was here. So at least our target for that level is a weekly time frame, this level, that would be our target here. But unfortunately, it hit our stop losses and went back to the upside, right? Now, you can ask me here, what is the reason for a candle, making that level as possible? If you go for the lower time frame on the H1 time frame, you can see here on the H1 time frame, we have a clear breakout structure here, right? Let me delete this. And you can see in the H1 time frame, what happened here is, we have a sweep and we have a clear breakout of that level. We have clear breakout of that level. So after that, a candle came to the extreme level of the H1 structure and makes the thing possible. Understand? So this is what happened. Unfortunately, it hit our breakups, hit our stop loss on the H4 time frame. It still hold on the H1 time frame, by taking the entries on the apex level. So it's still correct, the bias, the confirmation, that the thing, the reason behind the thoughtful for the idea, everything was the correct one. But it unfortunately hit our stop losses. When our stop loss was hit, we don't need to change our plan, or we don't need to jump into one strategy to another strategy. Just understand the reason behind for your stop loss. If there is a valid reason, it need to be acceptable. Understand? It need to acceptable. So this is the reason for the trade to be hit our, you can see here, after hit our stop losses, it still makes, it still makes the engulfing entry opportunity, but still it missed by 1 or 2 pips. Did you understand? It gives the confirmation that, but the engulfing entry opportunity was given by here, but still it missed by 1 or 2 pips. It's okay. It's need to be acceptable. So understand the reason behind the entries for the JP235. So that's the first thing, and we can place, in Euro USD. The same thing happened on Euro USD too. So let me analyze here what happened on the Euro USD. Always you need to start from the higher time frame, right? So you all know that I have posted on the monthly time frame bias. We are in the monthly expansion. Did you understand? This is the monthly expansion. Why? The monthly structure was a bullish one. You all know that. See the structure. What is the structure here? The monthly structure was a bullish one. Did you see here? Making a higher highs and making the lower lows, lower highs. So this is the monthly structure here. There is no intention for, you know for a bearish one. Why? The structure was making a higher highs, it breaking a structures, and it takes the liquidity. You can see the structure was broken out by here, and it comes to takes the liquidity, and it is sponsored by a key level. So we all know that the structure was a bullish one on a monthly time frame, right? Now we can go for a weekly time frame and a daily time frame. So what I told you on the weekly time frame or the daily time frame, you need to wait for the retracement to happen. So here you can see when a structure breakout was done, when a structure breakout was happened, so this is the stop of the expansion candle. So the expansion candle stop here and it make a retracement. The retracement has been completed by taking a monthly liquidity and triggered on the monthly key level, right? So when the monthly retracement has been done, we need to wait for a weekly or a daily expansion. Did you understand? We will wait for a weekly to daily expansion moves. So if you go for a weekly time frame, there is no reason for expansion, right? A candle just make that low and just make that high. That is the reason for this is the monthly key level. If you go for a weekly, there is nothing for you. But if you go for a monthly time frame, you know the reason for the candle making the bearish move and the candle making the bullish move. So the weekly is nothing. The monthly is the expansion. If you go for a daily time frame, what you are seeing on the daily time frame. Let me go for it. And if you go for the daily time frame here, you can check here the daily time frame, you know, what happened on the daily time frame. The daily time frame broke the internal structure on here. Did you understand? This is the internal structure. Why we are making the internal structure? Because the external structure was high, right? So we don't wait for until the external structure to broke out. We can choose the internal structure. So after the internal structure, you need to wait for a liquidity and you can choose a daily key level, right? So this is the internal structure has been broken out. The daily liquidity has been taken. The daily apex key level has been triggered. So what is that level? This is the daily reject daily level. Understand? So this is the daily reject daily. So this one, what is we need to mention the daily reject daily. So after daily reject daily, what's our intention? You need to go for the H4 and you need to wait for the H4 structure to be broke out, right? So this is the daily reject daily candle, okay, which is triggered on the daily key level, and the H4 breakup structure was this one, right? So this is the daily reject daily, and this one was H4 breakup structure. This is the H4 liquidity, and this is the H4 key level. This is the H4 key level, which makes, which makes the beautiful expansion move to here. Understand? The daily reject daily, H4 breakout structure, H4 liquidity, and the H4 key level. If we are taken a trade by this level, and you can place your stop loss limit below than the key level, and you can beautifully place your target on here. That would be easily 15 to 16 or not. But what I have waited here is, after the daily reject daily and the H4 breakout structure was done, still I have waited for the daily key level to be taken our entry on here. Do you understand? What I have waited here is, this is the internal liquidity has been taken. This is our daily reject daily. And if you go for the H4 breakup structure, and there will be H4 breakup structure has been done. And I have waited for this daily key level. And if we go for the H4 time frame, on the H4 time frame, yes. Okay. So this is where I have waited for. Sorry, not here, not here. I have waited for that level, right? So this would be a liquidity, right? This would be the liquidity, okay? And I know that that key level has been taken, okay? You all know that on H4 time frame, the structure has been broken to the upside. So what I have waited here is, I choose this daily key level, which is the engulfing entry model, right? So I have choose this level and I have waited for this level because of the daily time frame. I always concentrate to the higher time frame key levels. If it is nearby our lower time frame key levels, I always choose the higher time frame key levels, compared to the lower time frame. So I have waited for this beautiful move at least up to 10 or like this. Okay, I waited for this levels, but unfortunately it breaks a structure to the upside. It takes the liquidity on the H4 time frame. It takes the liquidity on the H4 time frame, and it is sponsored by the H4 key level, the H4 QM level here, and it went straightly to the target, right? So you need to understand here the thought process of the trade and what you are looking for the confirmation. and what you have chosen the key level, everything was the correct one. Understand? If it is a missed trade, you need to understand the reason behind the trade. If it is the valid reason, it need to acceptable. Understand? So the direction was correct, the thought process was correct. It just a missed entry. It just not came to the daily key level. It triggered on the H4 key level and it went to the upside. So that is the reason for the missing a trade on the Euro USD. So what we can look next, I have told you we are on the monthly expansion, right? We are on the monthly expansion here because the monthly liquidity has been taken out and the monthly key level has been taken out, right? So what is the target here? The target was at least this level for the long term, right? So for that, we need to wait for a weekly or a daily to broke a structure, right? So this is the weekly structure, right? This is the weekly structure. So what you all need to wait for is if the structure has been broken like this, sorry, if the structure has been broken like this, it makes some retracement and it will target for this monthly high in nearby future, right? If it is not break a structure, if it is failed to break out, then what happened? If some candle makes a liquidity like this, if some candle makes a liquidity like this, then it will the reason for making a structure to be a bearish one. Understand? So this all we need to monitor on the Euro USD. And what are the continuation trade we can take here? So the continuation trade, what we can take here is, this is the daily liquidity. This is the daily key level. So this is the daily reject daily, right? This is the daily reject daily. Now the daily breakup structure was done, right? The daily breakup structure was done. If you go for the H4 time frame, H4 or H2 time frame, there is no room for the retracement. The monthly expansion candles making a new higher highs to the upside. So let's wait for a candle to make some sell expansion. If it came to the retracement, we will wait for what? We will wait for the liquidity to be taken out and any key level to be sponsored remove. That makes the retracement has been completed. Once the retracement has been completed, we will start for another expansion to target that level, right? So this is the Euro USD outlook for the coming weeks. Let's wait for any room for the retracement. If it have any retracement, if it give you any intention for the retracement, then we will take any trade here to target the imbalance on the daily time frame because of the expansion moves. Once the retracement has been completed or the fair value gap has been filled, we will wait for the retracement has to complete here and look for another expansion, right? So this is for Euro USD. Let's set the time. Okay. So after that, what we can analyze here is on USD CHF. So let's check what happened on the USD CHF. Always concentrate on the higher time frame. On higher time frame, you all know that the structure was the bearish, right? It making the lower low like this. There is no breakout structure to the upside, right? So here you all know that a candle makes this low, a monthly candle makes this low, right? After that, if you go for a weekly time frame, in a weekly time frame, what happened? A candle creates a V-shaped key level. So that V-shaped key level was the start of the retracement. Understand? A candle completed this here expansion. Here the retracement move has been started. That retracement move happened, inside the structure. Did you understand here? This is the structure. This is the range from, sorry. So this is the range from this high to this low, right? This is the range. So inside the range, a candle came to trigger on that key level. Okay. So the retracement move has been started here. The retracement move has been started here. The retracement move has been entered here. I always told you that a retracement move always can be a temporary or can be a permanent. why we have a two types of intention here, two types of possibilities here. If this retracement move, if break a structure to the upside, did you understand? This retracement move break a structure to the upside, then that is the reason for a direction change. So after another retracement will done, then another expansion will be happen here. Understand? So always a retracement move has a two possible ways. It can be a permanent move or it can be a temporary move. Now here it is a temporary move. Why? It cannot break a weekly structure to the upside. It is sponsored by a weekly key level, right? If you go for a daily time frame, what happened here? So it is trigger on the weekly key level. Okay. Now the internal structure break to the downside. All right. Now what we have to, you need to wait for it can do some retracement to the upside, and it is sponsored by a key level and making a lower move like this. Understand? So USD CHF still a bearish move. Understand? Now here you can say we have this liquidity speed and we have this key level, right? Now all you know that a candle is making the expansion move here. So this is a possible for a retracement, right? Now what we can, if you have any buying opportunity, if you have any buying intention was done here, did you understand? This is the weekly key level, right? Inside the weekly key level, if daily give you the trading opportunity like this, then we can target it up to inside this range. Understand what is the range? The range is from this high to this low. Okay. So whatever you are taking a buy trade, that would be the retracement move, inside the weekly key level. We have this daily liquidity and the daily key level too. So if a candle trigger on the daily key level and give you any H4, any internal breakout or external breakout, we can target it up to this range. We can target it up to this range. Did you understand? Because that is the daily breakout level. So after that, if it is give you any sell opportunity on that daily key level, then we can target it up to that level, right? Did you understand? This is the structure formation. Now, you may ask me a question, what happened? This daily liquidity has been taken. If it make a breakout structure to the upside, what happened? Yes, it will change the direction. It will change the direction from bearish to bullish. Why? That's why I always told you a retracement move can be a temporary or can be a permanent. Understand? All can be happen by, you need to monitor on your daily key levels. What is happening on here? If there is no sell intention, the candle was a bullish one, then it going to take a high that level and it will change the direction. So always concentrate on this structure. Understand what is the trend? Understand what is the trend? Then what is the environment? In a bullish trend, it is the expansion environment or the retracement environment, the expansion phase or the retracement phase. You need to understand here, right? So that would be happening on the USD CHF. I hope this video helps you to understand the structure for making the outlooks for each and every pair. So keep watching the video. We will upload each and every video on the coming days. So thank you for your time. Thank you for your patience. So have a great day. Thank you for your time, guys. Bye-bye.